Amazon is giving notice to this $800 billion industry saying, hey, watch out, we're coming for you. So, in this video, I'm going to talk about that announcement and what that could mean for Amazon's stock price and Amazon stock investors. So, stay tuned and let's get into it. So, Amazon, in its latest shareholder letter from the CEO to shareholders, telling investors, hey, grocery is an $800 billion market segment in the US alone, with the average household shopping 3 to 4 times per week. And while we're pleased with the size and growth of our grocery business, we aspire to serve more of our customers' grocery needs than we do today. In other words, watch out. We're expanding. We're not happy with our current share of this $800 billion market. We're coming for more. To do so, we need a broader physical store footprint given that most of the grocery shopping still happens in physical venues. Now, they do own Whole Foods, and Whole Foods is on an encouraging path. But to have a larger impact on the physical grocery, we must find a mass grocery format that we believe is worth expanding broadly. So what they're saying is Whole Foods is not worth expanding broadly because by saying we need to find one that is, they've already got Whole Foods and they've realized that Whole Foods is not a solution for most people's grocery needs, right? Whole Foods is way too expensive and unaffordable for many households, and so they can't take a larger share of that market just by expanding Whole Foods, adding more locations. So what they're saying is we need to find another solution. Now they've been trying a few things with Amazon Fresh and other things, and what the CEO is saying here is that so far we haven't found one that's worth multiplying, that's worth just saying, hey, you know what, this works, let's multiply it, let's go, we found the solution. What they're saying is that we want this market, we want a greater piece of this market. We think we can do a good job of it because we've seen what we could do with Whole Foods and some of our other grocery products, but we just need to find a more scalable solution, right? Because for Amazon, having 30 stores, 50 stores, 100 stores, it's not worth it for them. It's not worth spending the time and effort and energy to do that because they are a business that generates over $500 billion in annual revenue. Taking us, adding 100 locations is not it's a drop in the bucket for them. So what's concerning to me is Amazon stock. If we look at a chart here of Amazon stock price, it's down 45% off its high already. And the big reason for this big stock price decline is Amazon's lack of profitability, its lack of profit margin. And, the grocery business isn't one that's, very lucrative, right? It's not known for being a lucrative business. It might be a massive business, true. $800 billion is a massive total addressable market, to be sure. However, that's $800 billion in sales, not in profits, right? So you've got other business of similar size. Now, I'll compare it to the advertising industry, which is a similar size, right? The ad industry overall is about a $800 billion total addressable market, but the advertising industry is way more lucrative than the grocery industry. Way more lucrative. I mean, Google and I should say Alphabet and Meta platforms alone account for close to or above $100 billion in operating profits just from the advertising industry. And that's just two companies. Sure, they make up almost 50% of the overall ad industry, but just those two companies alone generate nearly $100 billion in profits. I don't think the entire grocery industry at $800 billion generates if I had to say overall industry profits, I would say it's at let's be generous and say 5%. That would mean 5% operating profitability on 800 billion would be 40 billion dollars in operating profits for all of the companies right now in the US operating in grocery. If you don't, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. If you don't believe me, let me show you this stat here. So look at Amazon's operating profit margin over the trailing 12 months at just 2.38%. Now, they had been doing a good job of expanding that margin from around 1% in 2014 all the way up to 6% before the pandemic. Then the pandemic came and it was, mixed for Amazon. Initially, it boosted operating profit margin and sales as more people as more people shopped online. But then Amazon needed to also invest in capacity to meet those increasing customer needs. And then that overinvestment is now killing Amazon's profit margin down to just 2.38%, bringing it way back to 2018 levels of operating profit margin. 2016, if we just look at the operating margin on the rising part of the curve. So it's really hurt Amazon, and now investing in trying to capture that grocery business. Which, okay, so I've shown you Amazon's margin. So now let me add Kroger, which is a primarily grocery company, Walmart, which is it sells a big a lot of groceries, not complete groceries, but a lot. And then Costco, which is also similar to Walmart in that it's a lot of groceries, but also general merchandise. But look at all these profit margins. Look at how skinny these profit margins are. Kroger 2.78%, Walmart 3.34%, Costco 3.39%. So these aren't really exciting profit margins. And if you look at the industry, sure, it's an $800 billion industry, but you've got companies that are, you've got extreme competition for customers in the industry, which has brought down profit margins industry wide. So as an investor, I would not be too excited about Amazon, you know, getting all aggressive and enthusiastic about entering, giving notice to that $800 billion market, saying, hey, we're coming. We're not happy with the amount of customers that we have here. We're going to invest for more. All right, so that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership. I know you could be doing a lot with your time, so the fact that you watched this video up until the end right now, I really appreciate it. So thank you so much, and I really hope I'll see you again for another video.